There's a lot to talk about in this video of what a role as a financial analyst actually consists of. And having worked at different financial institutions such as investment banks, I've seen the demand from graduates for this role is very high. And so it's important everyone understands what exactly the role entails. Now, I'm going to be splitting the video up into several parts. Firstly, covering the day-to-day tasks, then some of the key skills required to excel in the role, the average daily hours you can expect to work, and lastly, the expected salary you can receive when it comes to working as a financial analyst. To begin with, a financial analyst can mean different things, but in its simplest terms, a financial analyst examines financial data of a company to help companies make business decisions. And the role is usually split between the sell side and the buy side. Now, sell side roles such as equity research analysts will typically be found in investment banking, and the key job of a sell-side financial analyst is to conduct a lot of the underlying research about a company or potential investment decisions, which they then sell to the buy side to be used in their own investment processes. Now, some of the decisions you'll be working on will be to advise companies on mergers and acquisitions, capital raising activities such as raising debt or equity capital, or initial public offerings, whereas buy-side roles are usually found in investment or asset management firms, and the buy-side will usually take that research done by sell-side analysts to do some of their own additional research and come to an investment decision off that. So some of these decisions will be if a fund manager should be buying a certain stock in their portfolio, and to be honest, a lot of the decisions on the buy side are to do with portfolio risk and construction. So they're always going to be looking at how best their portfolios outperform the market, to also conducting sensitivity analysis. Say if an interest rate rise was to happen by X%, how would it impact their portfolio market returns? And maybe they need to diversify their portfolio to cushion any negative impacts. The typical career path you'll find for financial analysts is to start on the sell side of an investment bank, work there for around 2 to 3 years, before moving over to the buy side. However, it is important to note that all companies, not just pure financial institutions, require financial analysts, as every company is naturally trying to understand the best path to grow and what investment decisions they should make. So companies such as Coca-Cola, Apple, Boeing all require financial analysts as well, which shows the great versatility of becoming one. Now, listening to this overview, you might be asking, okay, I understand what they do now, but what is a day-to-day role actually like? How do I end up making recommendations? To begin with, you will be reading a lot. You have to be able to keep up with news from around the world, which is impacting your specific market that you're looking at. You usually will be given a sector to look at, such as the automotive industry or the construction industry, and you'll start to develop a deep understanding of everything affecting that specific market or sector. And this is a very common interview question to be asked about your opinions on a certain industry that you're interested in. So always go into an interview prepared to talk about 1 or 2 industry sectors and what your views are about the current and future state of it. So your typical tasks in this role will be creating pitch decks for customers. This is where you'll be doing a lot of company research from publicly available online places, but you'll also be using specialist financial software such as Bloomberg or S&P Capital IQ, where you can get a lot of the same information but in a much quicker manner. When it comes to collating the information, highlighting trends, what the business environment is like, and the threats the company or sector faces, some of the ways to start this review is methods such as simple SWOT analysis or the PESTLE method, and this is just to frame your initial thoughts down. When it comes to preparing reports, especially on the sell side, a lot of your work can be just getting a lot of the information down, analyzing it, understanding what the customer wants to do, and using that in financial models to win engagements. For this, it's all about going stage by stage of what the business is currently looking like. The first step, as mentioned, is to gather company information such as employee numbers, businesses it's involved in, and its revenue trends. Then it's all about understanding what their needs are, followed by what is the best way to address those needs, and lastly, what you as a firm can offer them to reach those goals. And this process, when you put them all together, is called pitching. And when you're pitching to win the deal that you're doing to the customer, you'll be competing with other investment banks as well. And If you win, and there can be more than one winner, you'll then get to work with the client in a live deal, which could be an IPO or a merger or acquisition. One of the key things you have to take into account is, because a lot of what you're assessing is something to do with the future, there's going to be a lot of assumptions you'll be working with and incorporating it into your pricing models. So you have to be able to explain your assumptions, be confident about your assumptions, and of course, be realistic about them. Now, you will be involved in a lot of client meetings, but when you first start out, your main role will be note-taking and making sure that your team asks all the questions to the customer that you discussed together beforehand. Importantly, if the customer has any questions themselves, your job will be to make sure you write it down and then follow up with your team afterwards to make sure you address all of your customers' concerns. So to summarize, it's about providing value to the customer by helping them make future decisions, whether it's to advise on buying, selling, or holding a stock in a company, advising them on the benefits or drawbacks of a business deal, such as a merger and acquisition, or analyzing a private company to work on the best way to have them have an initial public offering and what the initial price should be. Now, I'm going to be splitting this section into 2 hard skills and 2 soft skills. The first hard skill is about Excel and PowerPoint, and this is a must, both from creating your financial models to presenting the information to clients. And just to simplify what I mean by a financial model, because it might be a new term for some of the viewers, it's simply an Excel spreadsheet which contains the key figures of a company and some projections such as how to achieve 3% growth year on year. Other financial models will be utilizing specific methods of valuation such as DCF, discounted cash flow model, but talking about that is beyond the scope of what I want to cover in this video. But a financial model is just a fancy way of inputting the key numbers of a company and giving an output of growth or valuation. Now, Excel, like every financial role, will be the bread and butter of what you'll be using every single day as a financial analyst. And there's going to be a lot more than basic functions that you'll have to work with here. You'll have to start utilizing simple macros as well as goal seek functions to help you in your work. The best piece of advice for Excel is to learn the shortcuts for these applications because it can save you a lot of time. And when it comes to PowerPoint, there's going to be a lot of PowerPoints that you'll be making for sure, day in and day out. And for each one, you have to do several iterations depending on your manager's feedback. So again, knowing the quickest ways to make changes will help you save a lot of time in your role. The second hard skill for a financial analyst to master is about understanding and interpreting financial statements. And this is why it's quite common to see a lot of Big Four qualified accountants working as financial analysts. And in some of the job adverts, actually, they specifically ask for a Big Four qualified chartered accountant. Another qualification which I've found to be extremely common in this field is the CFA. Now, both of these qualifications give you a deep knowledge on how to understand a company inside out, as well as assessing possible options of how best to grow a company. On to soft skills, and the first one, if you want to focus on the financial analyst nailing down, is communication, both in document writing and also orally. I've already talked about creating pitch decks and PowerPoints and the importance of learning how to do it quickly. But in this role, a big must is that you have to explain either to clients or to senior managers about what the data shows. Explaining the story of the company, where the growth opportunities lie, how you can help them achieve them, and the assumptions that you're utilizing in your financial models are all best explained not just from reading, but by talking about them. Creating that relationship will become even more important in this role as you progress. One thing an equity research analyst would do as part of their job is to challenge CEOs and CFOs about their own financial performances. So if you're covering, say, Goldman Sachs or JP Morgan, you will be challenging the CEOs and CFOs of that company. And there's not many roles out there where you can actually do that at such a junior level. So that just shows the level of seniority that you'll be dealing with on an ongoing basis in the role. The second soft skill that financial analysts have to think about is to be creative and think outside the box. Now, companies are looking for new ideas of how to grow themselves, and they're coming to you as a financial analyst expert on providing that input to their business. Now, of course, using basic models such as what I mentioned earlier around SWOT and pestle analysis will help you get a good ground view of what the company can and can't possibly do, but it's more about linking everything together, and more importantly, how things could change in the future, which is where some of your industry knowledge comes in handy. I'm going to be honest here and say you will have very long office hours in this job, especially when you first start out. 11 to 12-hour days are the minimum expectations, but you'll be working even more if you're covering a deadline to submit presentations, to pitch for a live deal. But once you get to grips with the work, the systems, how to present information in an efficient manner, as well as where to pull all the information from, those long hours will slowly go down, but it's still a staple of the job that you will be working for long hours compared to other jobs. Additionally, if you're covering US companies and you're not based in the US location, then when the quarterly earning reports are coming out, which usually occur after the US markets are closed, that means you're going to have a very long night ahead of you, as it's important to try and have your recommendation based off the latest earnings out as soon as a company has released any information. It looks like being a financial analyst is hard work, and it is. But let's talk about money, and this might make it a little more attractive. So as I mentioned before, there are many different types of titles a financial analyst might go under, but in this bit, I'm going to be focusing on those that are categorized under the investment banking area, and I look to give an overview of the UK and US based salaries. Now in the States, the starting salary will be around $80,000 to $90,000 with a small signing on bonus as well. In the second year, you can expect pushing $100,000. With the third year, you can expect most of your roles, whether that's at a big or small firm, to be easily above $100,000. And dependent on individual performances of how well you've made calls on whether to buy or sell a company shares, or the deals you've won with your team, as well as the firm's overall performance, bonuses will typically be in the range between 40 to 50% of your yearly salary. In London, the starting salaries are a little lower. So in your first year, you can expect your salary to be around the £60,000 range. The second year, it'll increase a little bit more to £65,000. And in your third year, you should expect your salary to be at least £80,000. Again, bonuses will be in the 40 to 50% range, and they'll depend on the previously mentioned inputs. So that's a good overview of a financial analyst, and also covers the basics of what you'll be expected to know in an interview when asked what one does. Now, being a financial analyst is a great grounding to learn so many different skills about how to assess a company, and also importantly, how to think strategically, which can be a big transferable skill into so many different roles. One other role which might interest you, which is very similar to a financial analyst, but with a few key differences, is becoming a credit risk analyst. I've already made a video providing an overview of that role, which I'll link next to me, so go check that out, and I'll see you all in the next video.